Hey everybody, we'll look at procedure 4, daily deposits of cash. We've already looked at procedures 1 to 3 for controlling cash. Okay, so daily deposit of cash. Exactly what it's saying, deposit your cash on a daily basis. So there's no cash sitting around. The less cash there is sitting around, the less of a chance of it is getting stolen, lost, right? So that's very important to deposit it every day. Now, as soon as it's deposited, a deposit slip is given is made and given to the bank, and a copy kept with the company. So we're going to look at an example. So look at this. After completing the daily cash proof, E-Plata, the owner of Brighton Cleaners, completes the deposit slip shown in figure 10.3 on the next page. The cash is deposited in the bank, and a copy of the deposit slip is kept by the company. So we're going to look at that. As soon as the page loads. There we go. So this company is banking with Scotiabank, and as you can see, that's the name of the company, deposit by the name of the person. Here's the date. Every deposit slip, remember we talked about pre-numbering, so we'll always check if we have every single number. If not, then what's the reason? So exactly what was deposited, what was the cash, how many checks, and the total deposited. So the person that deposits, the company that deposits it, creates it and gives it to the bank and keeps a copy. Okay? So that's proof of everything being deposited. Now, based on procedures 1 to 4, let's look at an example of a company that's doing all these things. That's going through the separation of duties. In our example, we have Beta Enterprises, who's a large wholesaler of heating and refrigeration equipment. And we will demonstrate the cash control procedures we've discussed so far. Okay? So we're going to have a list in the next page. Oh, sorry. Okay. So remember we said there's always a person, a mail clerk, who creates a list based on everything that comes in the mail. So all the checks that come in the mail. So the list of all the cash received on account, so all the checks received on account, so people that owe the company, is prepared by the mail clerk. So that's the first person we have, is the mail clerk. Remember that. So this list shows the name of the customer that paid, the amount received, and the invoice that is being paid. So there's always an invoice number. They're paying on that invoice. So 2 copies are prepared. So they're sent to the accounting department. Okay. So within that accounting department, we'll see who do we have. The actual cash is taken to the bank each day by the office manager. So that's our second person. The checks received are stamped. Each check is stamped with this. So a check cannot be deposited until it is endorsed. So endorsed means the person who's getting the check puts their name on it. So that's Beta Enterprises, and their address they put on. Okay. So the second copy is signed by the bank teller of the duplicate deposit slip. Remember we talked about that in the last procedure 4. So we have the 2 copies of the list of all the cash received. They're sent to remember we said they're sent to the accounting department. Here are 2 more people now. 1 copy goes to the accounts receivable clerk. So there's a person in charge of accounts receivable. They post this transaction. And the other goes to the accountant for journalizing. So the accountant is the person who puts in the journal entry. The accounts receivable clerk just puts it in their own system that this person has paid us. So here's the duties of the accounts receivable clerk. Posts to the customer account. This isn't the accounting books. This is the customer accounts. The accounts receivable clerk puts that in. As you can see, the accounts receivable clerk prepares a schedule of accounts receivable every month. And then this person deals with the customer. A statement of account is sent to each customer, so telling the customer how much you owe us. Now, this statement is also used to check on the accuracy of both Beta Enterprises and customers' records, right? So this list that the accounts receivable clerk creates will be checked by the accountant to see if both the lists match, because the accountant is looking at the books of the business, right? Okay, so here's our third person. Remember, now we had the mail clerk, we had the accounts receivable clerk. Also, we've talked about the office manager, and now the fourth person we have is the accountant. So the second copy of that list front that the mail clerk creates goes to the accountant, and this person puts it in the journal. We haven't talked about the cash receipts journal. Just think of that as a general journal, and they put it into the general journal that this has been received. Okay. And so the accounts receivable control account, that's the main accounts receivable account, is being updated by the accountant. And the subsidiary ledger, each of the accounts, each of the smaller accounts for each of the customers, is being updated by the accounts receivable clerk. So at the end of the day, both people's work should match, and even the customer will correct you, especially if it says that they owe, if the statement says the customer owes too much, the customer will correct you. Okay. Lastly, we have a picture of everything that's happening here. So again, let's read this. The separation of duties is a key component of all accounting control systems used to discourage fraud and theft, as well as to ensure the accuracy of the accounting data. All right, we talked about separation of duties and how it's so important. Okay, so here's a nice graphic organizer for everything that's happening. Cash receipt. The actual office manager makes the deposit slip and deposits the cash in the bank. Okay. The mail clerk makes a list of cash receipt. Copy 1 goes to the accounts receivable clerk. Copy 2 goes to the accountant. And then here are the duties that we talked about each person. Okay. So please understand this picture. It's a nice way to summarize everything that we've talked about. See, so now because of the separation of duties, all this should hold true. The entries in the cash receipts journal, so we said just think about that as a general journal, each day will equal the total bank deposit. So the accountant is making the entry in the general journal, right? That entry should match how much cash the bank office manager is putting in, right? So the bank office manager doesn't cheat, neither does the accountant. They both have to match. The customer should discover any errors in the customer account when the statement is sent out. Remember, the accounts receivable clerk is sending out the statement, and the customer will catch any errors. Lastly, the total of the schedule of accounts receivable should always equal the balance of the accounts receivable control account. Like we said, the control account is being controlled by the accountant, and the subsidiary ledgers of each of the individual customers' accounts is being controlled by the accounts receivable clerk. All those put together should add up to the big accounts receivable account. Okay. The duties of accounting personnel should be arranged so that one employee verifies the accuracy of another employee's work. In this case, we have 4 people. All right. And the separation of duties is implemented by most large companies, but it's difficult for small businesses because there are fewer employees. All right. That's it for procedure 4.